Ladies and gentlemen, good day and welcome to the Salzer Electronics Limited Q4 and FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Ohri from Progressive Shares. Thank you, and over to you, sir.
Thank you, Darwin. Good evening, everyone. On behalf of Progressive Shares, I welcome you all to the Q4 FY'24 post-earnings conference call of Salzer Electronics Limited. Please note that this conference may contain forward-looking statements which are based on the beliefs, opinion, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and may involve risk and uncertainties that are very difficult to predict. I now invite Ms. Avri Mangle for the opening remarks to be followed by question answer session. Over to you, ma'am.
Thank you, Rohit. Good evening, everyone, and thank you for joining us today to discuss the audited financial performance for the fourth quarter and full year ended March 31st, 2024. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. P. Sivakumar, Assistant Vice President Marketing, Mr. P.B. Bellary, Assistant Vice President Business Development, Mrs. R. Menika, General Manager Accounts, Mr. K. M. Murugesh, Company Secretary, Mr. Jitendra Vakharia, Director, KC Industries, and Mr. Raman, COO, KC Industries. I shall take you through the consolidated financial performance for the fourth quarter and full year ended March 31st, 2024. During the fourth quarter, our revenues increased to rupees 326.6 crores from 302.7 crores in the previous corresponding period. This growth was driven by the businesses of wires and cables and industrial switchgear. On the export front, our share of revenue was nearly 27%, demonstrating a year-on-year growth of nearly 18%. The EBITDA, excluding other income, was rupees 33 crores in Q4 of FY'24, as against 24.7 crores in Q4 FY'23, year-on-year growth of 34%, mainly on account of higher volumes and higher contribution of the industrial switchgear business. The EBITDA margin for the quarter stood at 10.13%, year-on-year improvement of 198 basis points. The profit after tax was rupees 13.3 crores in Q4 FY'24, as against rupees 9.9 crores in Q4 FY'23, a year-on-year growth of 35%. PAT margin for the quarter stood at 4.08%, year-on-year improvement of 83 basis points. Coming to our full year financial performance, for the full year FY'24, the net revenue was rupees 1,166 crores as against 1,037 crores in FY'23, year-on-year growth of 12.5%, driven by the businesses of industrial switchgears and wires and cables. The export share of revenue during the year was nearly 25%. The EBITDA, excluding other income, stood at nearly 117 crores in FY'24, as against 95.9 crores in FY'23, a year-on-year increase of 22%, mainly on account of reduced raw material prices. The EBITDA margin is at 10%, a year-on-year improvement of 78 basis points. Profit after tax is at rupees 47.1 crores in FY'24, as against rupees 39.6 crores in FY'23, YY growth of nearly 19%. While the margin stood at 4% in FY'24, a YY improvement of 22 basis points. Moving on to the breakup of the revenue as per our business division. Coming to the industrial switchgear division, contributed to 53.7% of the total revenues for the quarter and nearly 55% in FY'24. This business grew 8% year-on-year in the quarter and 13% year-on-year in the full year FY'24. EBITDA margin for this business was 13.3% in Q4 and 12.6% in FY'24, which is an improvement of 100 basis points over the last full year. Coming to the two high-value products in this division, three-phase dry-type transformer product grew 4% year-on-year in Q4 and 43% in FY'24, while the wire harness product grew 28% year-on-year and 44% for the full year. The wires and cables business contributed to nearly 40.5% of revenues in the quarter and 39.5% in FY'24. This is a nearly 7% year-on-year growth in this business during the quarter and 15% in FY'24. The EBITDA margin for this business stood at 6.3 in Q4 and 6.9 in FY'24. The building products division contributed 5.8% to our revenues in the quarter and nearly 6% in the full year. This business is the only B2C business that we have, wherein we sell many electrical products to the building sector. Due to high sales outstanding, we are slowing down sales to specific distributors. We're also doing some reorganization of teams and channels that we expect will improve the growth trend in the coming quarters and help increase our contribution from this segment. Thank you, and I'd like to now hand it over to Mr. Rajesh Doraiswamy to take us through the business development and the way ahead. Over to you, Rajesh.
Thank you, Savli. Wish you all a very warm welcome to Salzer Electronics Limited earnings conference call for the fourth quarter and full year ended 31st March 2024. Thank you all very much for taking time today to join us. We have shared our results update presentation and media release. I hope you all must have received it and gone through the same. I would like to share some recent developments and outlook for the future. To start with, on the market outlook, as we delve into the fiscal year 2024-25, it's imperative to gain insight into the anticipated trajectory of the global markets in sectors where we are dealing. With a cautiously optimistic view, the market is poised to undergo moderate growth driven by several key factors. Despite the challenges posed by various geopolitical tensions and economic slowdown in the key markets, particularly in US and Europe, we remain cautiously optimistic about the future growth opportunities for Salzer Electronics. Our unwavering focus on both revenues and margin expansion positions us well to navigate these challenges and capitalize on emerging trends in the global market. We are witnessing a mega shift towards clean energy on a global scale, which is fostering significant investments in renewable energy projects across the world. This presents a compelling opportunity for Salzer to leverage our expertise and offerings in the renewable energy sector, driving growth and innovation in this space. Moreover, the market outlook for Salzer remains positive, fueled by growing demand in India and ongoing investments in infrastructure and digitalization in the country. With our expansion plans underway, including the exploration of new markets like Australia, New Zealand, and the Middle East, we are poised to capitalize on these opportunities and further strengthen our market presence. As we continue to expand our product portfolio and explore new avenues for growth, we are confident in our ability to achieve our strategic objectives and deliver value to our stakeholders. On the business, some of the key developments in the last financial year. Throughout the year, Salzer Electronics has demonstrated remarkable progress across various facets of its business operations. Notably, the company has secured a patent for heavy-duty energy-efficient automatic changeover. This highlights Salzer's dedication to intellectual property advancements and enhancing its product portfolio with proprietary technology. Now, moving on to our subsidiaries. Salzer Coastard EV Chargers is one of our subsidiaries where we manufacture EV chargers. In the previous calls, we had informed that the chargers were being tested at ARAI for certification. In this process, we have encountered a small setback. Out of the total of 14 different tests that the chargers have to undergo at ARAI, we have passed 13 tests. However, in the one last test, which is the communication test, the chargers have failed. The reason for this is the chargers developed for European markets by our collaborator or as per the DIN communication standards. Whereas in India, it is as per ISO communication standard, which is mandatory. This is related to a software. Hence, we along with our partners are working on this issue to sort. Hence, we expect some delay in getting approval from ARAI. More detailed updates on this will be shared with you in the coming quarters. On our other subsidiary, KC Industries Limited, KC has shown consistent growth in sales performance, reflecting effective management and operational execution. As far as our subsidiary KC Industries Limited is concerned, the sales have been growing consistently and EBITDA margins are also improving. During this year, KC's revenue was at rupees 48.81 crore as against 41.7 crore last year, which is a year-on-year growth of 17%. EBITDA grew 42% year-on-year to 6.78 crore. PAT grew 28% year-on-year to 4.49 crore in FY'24. PAT margins stood at 9.1%. This is an increase of close to 100 basis points from last year. Financially, the company has demonstrated robust performance with sales, revenue, and profitability showing significant growth in Q4 as well as full year as compared to the last year. This was mainly driven by strong performance in segments like industrial switchgears and wire and cable. Our new initiatives, the three-phase transformers and the wire harness business, are growing well, and we expect this growth will continue. Export markets have also been instrumental in revenue generation, with Salzer actively pursuing expansion initiatives in regions such as Australia, New Zealand, and the Middle East, while anticipating continued growth in its switchgear business. This year, we have achieved noteworthy milestone in product development. Most notably, we successfully developed smart meters and the smart meter facility and received BIS certification for our single-phase smart energy meter. The cutting-edge smart meter factory is also backward integrated with Salzer's existing Coimbatore other factories, which have been manufacturing crucial electrical components for smart meters. As informed earlier, the trial production is underway at present, and we are in talks with various customers for long-term tie-ups. We recognize that the markets have slightly slowed down and that there are more issues ahead. Nonetheless, we are in a strong position thanks to our wide product range. We anticipate stability throughout these trying times because to our long-standing relationship with various large MNCs. I thank the entire team at Salzer Electronics Limited for their untiring efforts and all our stakeholders for your continued support and faith in the company. This is all from our side for now. I would like to thank you all very much for your time and attention. Now we can take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Once again, ladies and gentlemen, that's star and 1 if you wish to ask a question. We will now wait for a moment while the question queue assembles. We have the first question from the line of Rajesh Mangal Agarwal, from an individual investor. Please go ahead.
Yeah, good evening, sir. Thanks for taking my question. Please throw some light on the smart metering facility, whether this is to B2C way per household or like what?
Yes, sir. Smart meters is the meters that are used in every individual house and every small businesses, every factories, wherever the power is being measured and monitored and built, the smart meters are used. They are consisting of different types of meters, single phase, three phase for the application, and then you have HT meters for the factory.
So we have not developed all the 3 meters, sir?
We are right now developed single phase and three phase. Single phase, we have got the BIS certificate already. Three phase, we will get the BIS certificate by end of June. So this the sales of these meters will be to those customers who have already taken orders from the DISCOM.
Yeah. So right now, what is the progress, sir?
The factory has been, installation of the factory is almost 80% complete, and we are running trial production starting June. And we are in discussion with various customers, and we are submitting samples to the customers. The customers are in the process of evaluating the product and integrating it with their software. And we expect the commercial production to start as soon as possible.
Okay. Sir, second and last question is, what is the future guidelines for top line growth and EBITDA margin for FY'25?
Excluding the smart meters, we expect to grow anywhere between 18 and 23% in the coming year. Smart meter business sales will be over and above that.
Yeah, both top line and EBITDA.
Yes.
No. Top line, sir. Top line, your EBITDA margin is around 10 to 11%. So what is the future guidelines for EBITDA margin for FY'25?
EBITDA margins excluding smart meters, EBITDA margins we have improved by close to around 70 basis points this year compared to last year. So we expect this to go up by another 1 percentage point in the coming year.
So around 11%, we think.
Yeah, 10.75 to 11. Yeah.
Okay. Thank you. Thanks for this. And all the best, sir.
Thank you, sir.
Thank you. The next question is from the line of Bala Murari Krishna from Oman Investment Advisors. Please go ahead.
Hi, good evening, Rajesh.
Good evening.
So my question is again on the smart meter only. So we are going to supply to AMPs, right, who already won tenders from DISCOM. So are there any future plans to supply directly to DISCOMs, like in Tamil Nadu? I think the tender is yet to be awarded. So is there any scope for you to participate in the tender?
Good question, sir. Thank you for bringing this up. Right now, I think our focus is to manufacture meters and sell to the AMIFPs, those who have already taken orders from DISCOM. It is understood from the data that is available in the REC website that close to 15 crore meters have been tendered and orders have been taken by various AMIFPs. So our major focus right now will be to get to this 15 crore meter orders and supply to the AMIFPs. For your second question, I think yes, I think we have also got the AMISP license already from REC. So we are also eligible to participate in the upcoming tenders. So we will keep our options open and we will see if there is a possibility, if we are qualifying for the requirements, we will be participating in the tenders and taking orders directly from the DISCOMs.
Yeah, that's good to hear, sir. And secondly, on this, sir, so we are initially planning to manufacture 4 million smart meters. So I think maybe if we start trial commercial production from the June, so I think we could able to achieve this 100% capacity in 1 or 2 quarters, right?
Yes, I think we are ready with the facility. As I said, 80% installation is complete. The balance 20% also will be completed in the next 1 month or so. We have already started trial production. We are just waiting for the first order to come in. To achieve 100% capacity utilization, I think that depends on the order inflow. So we are doing all that we can in our capacity to bring in orders and fill the capacity.
Okay, that's all. And lastly on this, sir, I think average selling price of the smart meter would be around 3,000 rupees. So we can expect like 1,000 crores revenue if we are at 100% capacity utilization on a year, entire year.
Yes, I think the pricing of the smart meter varies anywhere between 2,400 to 2,700, 2,800 for single phase, and the 3 phase is a little higher. And you're right, I think our capacity at 100% utilization, we manufacture 40 lakh meters. We expect 1,000 crore revenue to come in from that business.
That's very good information. Lastly, on any other new products which are under trial or you want to start production like smart meters or EV chargers. So any other product which is on the pipeline which could be realized in the maybe next 6 months or 1 year or maybe 2
There are
years?
various new products that we are working on. There's nothing that is ready to launch and or anything that is significant to be informed. So we just keep doing a lot of new products. We keep expanding our existing product portfolio, but nothing new as of now, like smart meters.
Okay, so that's all from side. All the best.
Thank you.
Thank you. The next question is from the line of Prajay, an individual investor. Please go ahead.
Hey, hi. Am I audible?
Yes, sir. Please go ahead.
Perfect. So first of all, congratulations for the beautiful numbers. I have two questions again on smart metering. So for FY'25, what is the revenue that you are expecting as a percentage of total revenue?
Yeah. Thank you for your appreciation. On the smart meter, as I just informed, I think at full capacity, the revenue generation will be around 1,000 crores. However, to give a projection for FY'25 will be slightly difficult because we are still negotiating with various customers on the orders. So without a solid concrete backup from our customers, I will not be able to give a projection. But my expectation is that I think at least 50% capacity utilization should be achieved. So I expect that we should be able to reach at least 400 to 500 crore revenue in the smart meter business if everything goes well from now.
Okay. Thank you. And my second question is that you have given a growth expectation of 18 to 23% for FY'25. I wanted to know about the breakup with each business segment. So can you give me an expectation of growth via industrial, switchgears, copper business and building divisions along with the EBITDA margin expectations?
As I think EBITDA margin expectation, I already said that I think we will be increasing our EBITDA margin by at least 100 basis points from the current level of 9.75% to 10.75 to 11%. So that's our target for the coming year. On the growth, industrial switchgear business should be growing at around 22-23% this year. Copper wire and cable business should be growing between 18 and 20%. Our building segment, we are expecting that it will grow by around 40%.
Okay, perfect. And best of luck for the future. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Sunil Katesia, an individual investor. Please go ahead.
Thank you so much for the opportunity, sir, and congratulations for the good set of numbers. Sir, just wanted to ask you about the smart meter. Over a period of, say, 3 years down the line, what percentage of market share which we are looking for that? Considering the demand is there for around 25 crore smart meters to be replaced over a period of years, 3 years down the line.
Sir, very difficult question to answer. Because the market is actually, as you said, it's a very big market. We expect this, the RDSS scheme alone gives an opportunity of 25 crore meters in the country. And then we have opportunities to export to the Middle East, the Far East, as well as the African market. So there are markets outside of India. Even if we consider this 25 crore market, it's, in my opinion, in my personal opinion, it is going to take at least for next 5 to 6 or 7 years to complete the installation of this 25 crore meter. Right now, our capacity is 40 lakh meters.
Okay.
If we get the capacity filled up as soon as possible, as soon as we get the capacity filled up, we hope that we will expand this capacity or double it for another 40 lakh meters. So that is our idea. So considering all this, if we are able to secure orders and install the meters as expected, if the customers complete the installation as expected, I think we should be, in the next 5 years, I think we should be able to sell at least 3 to 4 crore meters.
Okay, great. That's great. Thank you so much, sir. That's all from my side.
Thank you. We have the next question from the line of Chirag Jain from Yogya Capital. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, I have two questions. First, on the smart meters, we are seeing some friction on ground on the installation side. So how are you seeing that?
Say that again. I didn't get your question. Say that on the ground?
On the ground, there are reports of people not allowing the power grid companies to install.
There was some news recently from Gujarat that people are not happy with the smart meters.
Yeah.
I think there will be resistance to change. People think that smart meters will charge them more and things like that. But I think the technology advancements cannot be stopped. I think it will move forward. The government is, they want this project to happen. This will create a lot of positives for the DISCOMs going forward.
So hasn't the deployment been slowed?
No, deployment is slow at this moment is not because of the resistance from the general public, but it's because of the issues that the AMASPs have today because of supply of meters, integrating the meters with softwares and ensuring that the service levels are at 99% plus. Because if the meter doesn't work, then the DISCOMs can't bill. So I think people are still testing and ensuring that things are working fine before they go at full speed for mass implementation.
So don't you think there would be some delays in the installment before the actual size scales up because there are issues in the installed meters and something like that?
I think we will definitely see a lot of shakeouts in this field in the next 2 years. There will be a lot of new players coming in. There are a lot of old players getting out of this business. We will see definitely a lot of quality issues because, communication of 15 crore meter or 20 crore meter over GPRS or RF is not an easy job across India. So that needs a lot of bandwidth from the telecom industry, capability and bandwidth from the service providers or system integrators. We will definitely see a lot of shakeouts. So I think in the next 1.5 years, we will see a lot of consolidation and then things moving forward. That is why I said in my previous answer that it will be a 5 to 6 year project to complete this 25 crore meters.
Okay, fair enough, understood. What are the expected margins currently do we have on mind for meter facility?
Meters, I think it's very difficult to say this now because we are still in the prototyping stage and starting the trial production. But we expect that we will see this will be a very short on working capital days because of the demand that we see in the product. So there won't be a stretched working capital in this. So considering that, we will see an EBITDA margin of close to 15% on this.
Okay. Secondly, on the EV chargers side, the EV chargers technology hasn't moved up as we planned up to. So also the sales of the EV in the new cars is almost stabilizing or declining to say. So how do you see that to tap that opportunity and how are you working again on that? So can you give some light on that?
Unfortunately for us, I think there has been a setback to complete the development of our chargers in the testing. But then I feel that this is a short-term setback, which we will overcome along with our partners and the technical team that we have. On the business front, I think what you say is right. I think the EV business has, I wouldn't say slowed down. I think the growth has slowed down or tapering a little bit. But I think it is temporary. Going forward, in my opinion, at least 20% of the vehicles will become EV. And that's what the world also is moving forward, because that's what the US and European markets are going. So I think India will be following the same trend. So before the actual business grows on the EV four-wheeler front, we will be ready with our chargers. And I expect that we will be able to capture a significant market share in the EV charger business.
So, getting to more in granular sense of the testing team, so what are you doing now to how, as we have failed in the Indian conditions, to considering the previous failure? So, what changes do we have in mind or we have done in the last quarter?
Actually, I wouldn't consider this as a failure because we have completed almost all the tests. The charger is charging the cars. It's working very well. Only thing is that there are different technologies to communicate with the car. There are different standards of testing for the communication protocol. So there are DIN standards, there are ISO standards. There's another different standard for the US market. So the DIN standards are working fine, but the ISO standards are not working properly because the standard that the charger was developed is for Europe. Unfortunately, it is not complementing the Indian standards. So now we are trying to change the software and incorporate the Indian communication standard also. So it's just a change in software that we have to develop. There's no change in the hardware.
Okay, so it can withstand the 50 degrees centigrade or temperatures which are...
All those tests are completed.
Okay, fair enough. So we have started work on that?
Yeah, we have already started work on that, and I think we will complete the software, do the internal testing, and then go back to ARI for the certification.
So, when do we expect something on that?
Difficult to give a timeline for that for right now. I think in the next one month or so, we will be having a clear picture on when this will get completed.
Okay. Thanks. That was informative. And all the best. The future looks promising for you.
Thank you. Thank you.
Thank you. The next question is from the line of Amit Agicha from HG Hawa & Company. Please go ahead.
Hello, good evening. Am I audible?
Yes, sir. Good evening.
Yeah, thank you for giving me the opportunity to ask the question. My question was regarding any capex plan for the FY'25.
I don't have correct capex. Anyway, yes, I think there's no major capex because we have done our smart meter capex almost 70% this year. So the balance will be done next year. Other than this, there is no major capex, and we will be doing the maintenance capex of approximately 17 to 20 crores.
Okay, and as the company has informed, like the capacity of the smart meters is right now 40 lakh meters, and the company is also able to make a double capacity to 80 lakh meters. So will it be capex be required for the 26 or 27 FY?
I think it depends on when we are filling this 100% capacity and how the commitments from our customers are coming in. So it can happen in FY'26 or FY'27.
Okay. Thanks a lot.
Thank you, sir.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Very much, sir.
Okay, yeah. Thank you very much, sir, for this opportunity. So I just wanted to understand this commercial production, when we are expecting it to start, the smart meter?
As I said, I think the trial production is underway. Commercial production, we are ready once the orders come in. So we should be, in my opinion, I assess that I think by June, July, we should be getting some orders and starting the commercial production.
By June. And what is the total capex for this plant of 40 lakhs unit?
For 40 lakh unit, When the entire plant is installed and completed, our total capex will be close to around 45 crores.
Total capex is around 40 crores.
Yeah.
Okay. And you mentioned that if everything goes well, we will be able to reach 400-500 crores revenue from smart meter. Here, which year we are referring to for this 400-500 crores?
If everything goes well, I'm referring to the current year.
FY'25. And can this 400-500 crore revenue, can we record, 15% EBITDA margin that we are guiding for this meter business?
First year might be a little lower because we're just starting. And I'm also not very sure that whether we will be able to do 400-500 crores because we have to do 20 lakh meters if we have to do that kind of a revenue. So it depends on the order inflow. It depends on the supply chain. So there are a lot of things because we are starting new on this. But I'm optimistic if we are able to do this first year and the EBITDA margins, if not 15, I think definitely it will be between 12 and 15 for this first year.
12 to 15%, right?
Yeah.
And if not 400, 500, maybe 200, 300 crores is what we might target, right?
That's very, very optimistic, yeah.
Understood. And just one last final thing, I think you mentioned next 5 years we plan to sell about 3 crores meter, right? So that effectively means a revenue potential of 7,500 crores over next 5 years, right?
Yes.
Okay. So what is the risk we see in that? What can happen if, what is the risk to it, the outlook that we are sharing here?
Actually, the risk is if the meters installed already doesn't work properly, if the communication doesn't happen, if the entire installation by the customers, by our customers doesn't happen properly, then the whole thing might slow down. So if it doesn't happen in 5 years, I think it can happen in 6 or 7 years. But it will definitely happen because the government is committed to do this, to go ahead with this project, and they have awarded tender. So it will definitely happen, but it might take a couple of more years to complete that.
Understood. But I think the tendering is for 15 crores meter, right? That has been...
Yeah, the other 10 crores will start now. Once the elections are over, the results are out, I think then the model code of conduct is completed, then the tenders for the rest 10 crores will start.
Understood. And we are developing three-phase and single-phase smart meter, right?
Correct.
Okay. Fair enough. I think that would be it from my side. And just one last more thing. For doubling the capacity to 80 lakhs units, how much you will have to spend? You mentioned 40 crores.
We would need to put in another 40 crores for that.
Achha, so another 40 crores we need to put.
Yeah.
Okay, fair enough. That's it from my side. All the very best to you. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Tanush Mehta from JM Financial. Please go ahead.
Hi, sir. I have a couple of questions. Yeah, am I audible?
Yes, sir. Right.
Yeah. I have a couple of questions. So we've discussed it. A lot of orders are under discussion and we are nearing, closure. So can you give some light on the quantum of these orders? Because it seems that, sir, we are doing a few things at the same time. So if you can give some clarity that, through your OEMs or, through smart meters, like you all are prior suppliers to some good MNC names. So what can be the quantum of orders that we are expecting?
So there is no clarity on the quantity of orders that we might get for smart meters. I think initially everybody, including our customers, don't have a clarity on how many meters they want to buy and install because the entire scheme is being tested right now. So we really don't have a clarity on the quantity of orders that we might get. It can start anywhere between 10,000 and it can go up to 1 lakh or 10 lakhs, depending on how our customers are capable of buying and installing this. So I'm afraid I will not be able to give a quantity clarification at this point of time on the smart meters particularly.
Okay. And the other part of the business where,
other part of the business, we have very good clarity, and that is the reason that we say that we will be definitely able to grow between 18 and 23%, given the market conditions.
Okay. And sir, I have seen from the promoter holding that, in the last, I guess, 16, 18 quarters, promoter shareholding has gone up from some roughly 32-33% to now 37%. So, till what stage are we looking, till how, what's your view on the same?
I think we have increased from 32 to 38 as of now, and I think this for this year, I think this is going to be the limit. However, I think as promoters, we will be comfortable and looking at increasing this further to close to 40% in the coming years. There's no timeline for it, but that's the yeah.
Okay. And one last question that when I'm seeing your financials overall, we were doing close to 10-12% margins in the early 2015-14 period when our top line was, let's say, 250 crores. Then we had stable margins. We hit single-digit margins in 2022-23, and now we are ending at roughly 10% EBITDA for 24. So one thing is there that, in the past, what was that one difference that was making us, make EBITDA of 12-13%, and now we've come up to 10%. So, are we on the trajectory to do better than what we've done in the past? Because I think smart meters and all are value accretive businesses. So can this margin cross your all-time high margins that you all have done in the past as well?
Sir, good question. Thank you for bringing this up. Yes, I think you're right. We were at around 12% blended margins in the previous years. Just dropped in between. I think COVID and post-COVID it actually dragged down very much to around 8% in FY'22, which was the lowest for us. In FY'21 also we were at 10, so it came to 28% in FY'22, and we have started coming up back to around 10%. However, there are two things that we have to look here. One is we have two different types of businesses. One, the industrial switchgear and the wire and cable. Traditionally, the industrial switchgear businesses used to give us 14-15% EBITDA margin, and the wire and cable used to give us around 7%, 7 to 8% margin. I think post-COVID, both has dropped drastically to close to around 11% on the industrial switchgear, wire and cable to around 6%. So that's the reason that we dropped to 8 and then now coming up back to around 10%. Nevertheless, if you look at the absolute numbers, in 3 years, I think from 60 odd crores of EBITDA margin, we have come to around 110 crores now on a standalone basis. So the absolute numbers are still going up. And the other compromise that we have to make is when the volumes are going up, margin constraints are there for every product and for every business. So that's also another point that we have to keep in mind. Considering all this, what now we are focusing is we want to be back at around 11%. So that's the target that we are having. And I'm hopeful that we will be able to achieve that in this coming year. If not 11, at least closer to 11% is what we are targeting to achieve in the coming year.
Okay. And sir, thank you for that. My last question. I think in the early 2020-21, somewhere we had announced that we have done some tie-up with German company, with our exploration in the EV business. So where are we standing in that case, sir?
It's not German company. I think it's an Austrian company.
Oh, sorry, Austrian company. Sorry.
Austrian company. And then I think that's in my call also I mentioned what is the status of the chargers. And I think in the previous question also I explained in detail what is the status of the charger. I think we are working on it. There is a small setback. However, we will correct on the technology front and then we will be out with the charger as soon as possible.
Okay, sir. Okay. Thank you.
Thank you.
Thank you. The next question comes from the line of Ayush Singla, from an individual investor. Please go ahead.
Hi, sir. Good evening. I had a few questions. So I wanted to know that what is the current capacity of the smart meters facility that we have set up, and what is the timeline that you have in your mind if we, even talk about doubling our capacity from the existing one what we have set up?
Our current capacity is 40 lakh meters per annum. We will be planning to double this only if we fill up this capacity. So that's the future. So our first target is to fill this capacity up, and that's what we are working on. And we hope by end of this financial year we will be full capacity orders, and then we will start working on expansion after that.
Right, sir. Right. Second, sir, I had a question that what is the addressable market size that Salzer, is looking out to gather from the launch of smart meters? And also, what are the strategies that we have set out to, compete with the listed peers like Genus and HP Electric?
The market is too big. The addressable market size is around 25 crore meters in the tendering space, and non-tendering space, I would say at least there's another 5 crore meters. So there's around 30 crore meters is the market size that we are addressing. So there is enough room for Salzer, as well as there may be few more new players that may come into this space. So Genus and HPL and Schneider, and there are many others who are already there in this field. Everybody will have their own market share, and we are also looking at trying to get our share of market in this business.
Right, sir. So another question I had is that what are our current debt levels, and for the setting up of this smart meters facility, what kind of capex have we incurred, and the capex what we have incurred, how have we arranged that? Means by debt, internal accruals. I just wanted to know how's the arrangement being done.
Our borrowings, our working capital borrowings are at around 284 crores. If I'm not wrong, I think 294 crores. On the long-term debt, we are at around 12 crores. For setting up the smart meter facility to invest around 40 crores, we have taken a term loan of around 20, which we have not fully availed so far. I think maybe going forward when we complete this project, if required, we will avail that 20 crores. Otherwise, our long-term debt currently is at around 12 crores.
Right, sir. And so just last one question what I had is that what's our current cash conversion cycle, and how do we see it, going forward in FY'25? Means by how much can we see it reducing so that, we can see a good impact on the financials accordingly?
Our cash conversion cycle currently is at around 145 to 150 days, with 90 inventory days and 90 debtor days, and creditor days at around 32. So that's our current cash conversion cycle. We have been consistent, I think FY'23 with the same level, and we are same level. We wanted to improve, but we couldn't. Our ultimate goal is to have a cash conversion cycle of around 125 days. Net working capital days.
Right, sir. Right. That's it, sir, from my side. Thank you so much.
Thank you. The next question is from the line of Mohit Madiwala from Envision Capital. Please go ahead.
Hello, sir. Good evening. Congratulations on a good set of numbers. So, sir, my first question is that for FY'24, could you tell us the EBITDA margins for each revenue segment? That is your switch gears, wires and cables, and building products.
So thank you, sir. Thanks for the appreciation. I think this information is there in the investor presentation. You can always take a look at it anytime. Now, just I can say that I think FY'24 EBITDA margin for the industrial switchgear was around 12.7% compared to 11.6% in the last year. Wire and cable is around 7% compared to 6.5% last year. Building segment is at around 0.5%.
Okay, sir. Got it. Thank you. And expectations for FY'25 in a similar range?
The breakups I don't have, but as I said, I think we will be able to improve by 1 percentage point
Right, sir. So overall, 1 percentage point on the EBITDA margin.
Yeah.
Okay, great. And sir, I also noticed that from on the balance sheet, right, from FY'23 to 24, the long-term debt has gone up slightly. So my question is that where will this be utilized, and any outlook on paying off long-term debt eventually altogether?
I think as I mentioned, I think we are implementing the project of smart meters right now. That's why you see the increase from 7 to 12.5 crores on the long-term debt. So this has been utilized for the setting up of the smart meters plant.
Smart metering. Okay, super.
Yeah.
And sir, just one more just wanted to get some understanding on the EV charger piece. So first question is that Salzer Costar is not a wholly owned subsidiary, right? It is it's consolidated as a subsidiary.
Correct.
And
yes.
so what is
Salzer owns, as of now, Salzer owns 60%.
60%. Okay. And sir, just one last question on this EV piece only. What is the aspiration in this segment, if I have to ask you very directly, in terms of like the vision that you have, let's say for as a manufacturer of these type of chargers, what type of chargers will be made? And also maybe a little in terms of the scale that you want to achieve, the revenues, the margins, just when all of this, when the testing comes through, when the clients come through, what is the aspiration for this piece?
The vision and the aspiration, I think I have already mentioned this in one of the previous calls. I think the vision and aspiration is to see that this EV business grows to 1,000 crore business. And we want also to be a charge point operator across the country so that we can install our own chargers and ensure that there are highway charging network, Salzer charging network. So that's the ultimate vision and aspiration. However, I think it's a long way to go. And we also see that the business is evolving in a different way, because there were a lot of positive, optimistic views until very recently. But looks like, I think the EV business, the growth is tapering, as I already mentioned previously. There are certain negatives that are being talked about on the EV vehicles, even the Euro. Nevertheless, all those things leaving apart, I think the business will still grow, and we still want to be a part of that segment, and that's why we are working hard to see how we can bring out a very efficient and high-quality charger, high-quality fast charger in India.
Sure, sir. Okay, perfect. So just to follow up on this, these challenges, these headwinds that are there, does it have anything to do with competition, or is it more from like a demand side?
Which one? Say that again.
These challenges that, or sort of headwinds that we are facing in the EV charging piece that you said right now.
The challenge we are facing is to prove the technology and get a certification as per the Indian standard.
Okay. Got it. That's it from my side, sir. Thank you so much, and good luck for the future.
Thank you, sir.
Thank you. The next question is from the line of Munjal Shah, an individual investor. Please go ahead.
Thank you for the opportunity. And sir, congratulations for the good set of numbers. Sir, two quick questions. I'm actually new to the company. So I just would want to know that on the base business side, if we are talking about the transformer space, so basically I read we are into toroidal transformers. And considering the increase in the power consumption and in times to come, sir, can you throw some light on how we are seeing the business to move, and do we have a scope of increasing business on the transformer side?
I think the whole application for the transformers, both single phase and three phase that we are building, is dependent on the infrastructure development and the component and the product development of various companies. Because the usage is in renewables, in equipments, in machine tools. That's the usage. So there is no impact on the power stability or instability on the transformer scale, because we are not into the distribution transformers. That's not our business. So irrespective of what happens in the power stability, I expect, looking at the future growth of the country, the transformer business will definitely grow for us. Particularly if you look at the digitalization, the data center, the renewable business, as I mentioned in my call, these sectors are growing very, very rapidly across India. And now, when the AI and the machine learning and things like that come, I think the world will need much more data centers because it all depends on data. So that will actually drive this business at a much, much faster pace. So we expect, I think last year we have grown close to around 40% on three-phase transformers via harness. Third transformers is a little lower at around 25%. So we expect that this growth trajectory will continue for this business, this products.
Okay. And so basically, we are basically into power transformers, right? So if I'm not mistaken.
Yes.
Okay. So you see that there is a good headroom for growth in coming years with the emerging sectors, basically, like data centers and renewables per se.
Yeah, correct.
Okay. And sir, on just a small question on the charging infrastructure side. So you mentioned the concerns, and once the concerns are resolved, also if we assume the best case scenario, so what would be the EBITDA margins to drive this business going forward, basically?
We actually projected an EBITDA margin close to around 18 to 20% if everything goes well in the charger business.
Okay. Noted, sir. Thank you so much. Thank you.
Thank you, sir. Yeah, thank you. The next question is from the line of Rohit Ori from Progressive Share Brokers. Please go ahead.
Hi, sir. A couple of questions from my end. First one is related to the export business. If you can take us through that we were trying to find some opportunities in Russia. Has that initiative been doing well, or how is that right now?
We found. Hi, Rohit. First of all, hello. Thanks for hosting the call.
Thank you, sir.
Yes, I think we were able to get some introduction in Russian market, and we got able to sell on the first order. But we are still expecting much more to happen in Russia, which we will know in the coming quarters.
Any ballpark number you'd like to share?
I don't think so that we have a projection for Russia as of now.
So you think that from around 26%?
But in my opinion, as far as I have seen or talked to customers there, it looks like a very large market, as large as the Europe or the American market that we cater to. So hopefully, I think in the coming years, we will be able to capture reasonable size of market share from Russia.
So from this 26% kind of export, do you think there's more scope to increase that?
Given that now we have these smart meters now, we will have the Indian business also growing at a very, very fast pace. If we can maintain this 26-27% itself, will be a great achievement, in my opinion, because that also will ensure that the exports also growing at the same pace.
Okay. So there was some debottlenecking activity which was going on, which was indicated like some 3 quarters ago, where you were working something on the rooftop for some addition of some line. Has that been completed?
No, I don't. Not able to get what you're saying. Debottlenecking in the production facilities?
There was some addition of lines that you were trying to do. Probably.
No, I think that's the constant process in various product lines. The capacity reaches its optimum level. I think we try to do debottlenecking or we try to expand capacity. That's an ongoing process, and we continue to do. We have done that for several product lines, and being continued to be done.
Okay. So we see some of these products from Salzer, if you travel in the Shatabdi trains, probably from Mumbai to Ahmedabad, and currently the government is talking about a lot of Vande Bharat trains. Do you think that we have some scope over here in Vande Bharat trains?
Yes, sir. We sell, I think, switches to the Vande Bharat trains, the rotary cam switches. That's the business that we do. We have a lot of potential to sell transformers also into the Indian Railways, but that's still not complete because of various reasons, testing, approval, pricing. There are so many things that's involved when we get into railways. But yes, I think when the number of trains increases, our business of rotary cam switch to the railways will increase, which will also improve the margins.
Okay. Okay. Can you share that how frequently these kind of orders come from the railways?
It's basically tenders. So there are tenders coming out in a year, at least 7-8 times in a year, in different intervals. Sometimes everything comes in 1 month, or 2-3 months, nothing happens. Then it comes again. So overall, I think it's around 7-8 tenders in a year from Indian Railways, and then there are also workshops that comes out with various tenders and orders.
Because the government was trying to implement some of these, Vande Bharat trains for the metros. So do you think that Salzer can play a role over there?
Yeah, same products will get used in those. Yeah,
Okay. My last question related to KC Industries. If you can take us through the performance. Of course, you have given good rewards to the shareholders, the long-term shareholders of KC. But do you think that KC could be a 100 crore company in next 3 or 4 years or so, maintaining the EBITDA margin?
Target is to grow at around 20% in the current year, and then reach 100 crores in the next at least 3 years. Yes, that's the aim and focus. We are trying to get there, and then you continue to maintain the PAT margins, because if you look at the PAT margins of KC, it's very good. It's close to around 9%. We are making PAT margins in KC.
Okay, so thank you for answering my question. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Prajay, an individual investor. Please go ahead.
Hi, I'm sorry. Even I'm new to this company. Will it be possible for you to share the volume numbers segment-wise?
Very difficult, sir, because the segment has multiple products, and it will be difficult to share volumes segment-wise.
Okay, so is it possible that from next company presentation you can share segment-wise volume? It can give us the idea of the product.
Too much of data, but we will try. We will try to do our best. Yeah.
Okay. Thank you for considering. That's it. Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Mr. Rajesh Doraiswamy for closing comments. Over to you, sir.
Thank you very much, all of you. Thank you, Progressive, for hosting this call. Looking forward to interact with you during the quarter as well as during the next investors call. Thank you all very much for your time and attention and support.
Thank you. On behalf of Progressive Shares, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.